Apple stock is up over 12% in the last month, and the primary catalyst is the launch event for the new iPhones, with the iPhone Air becoming really popular. Pre orders are looking really strong. So, investors want to know, is Apple stock a buy after the announcement, after the price increase? I'll answer that question in this video after a brief message from my sponsor.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Apple stock is up over 12% in the last month, but if you look year to date so far, it's only up 2 percentage points, a little over 2 percentage points year to date in 2025. Coming into 2025, I told investors I didn't like Apple stock. I didn't like the risk versus reward. I didn't like the valuation. And already 9, 10 months into the year, it's looking like a good call because you've taken a substantial amount of risk with Apple stock and you're only up over 2.2%. It hasn't been a good investment considering the risk, considering you could have gotten better by investing in a government bond or investing in the S&P 500 index. But what about now? What about after the increase? What about after the launch? Well, it wasn't just the launch of the new lineup of iPhones that has Apple stock performing well. There was a lot of positive developments when the company updated investors in their most recently completed quarter. In fact, CEO Tim Cook said that the June quarter revenue was a record of $94 billion, and that was up 10% year over year. It had been many quarters since Apple had reported a double-digit increase. Investors were becoming scared that Apple could no longer generate double-digit revenue growth. So this was a huge relief for Apple stock investors that the company was able to deliver 10% revenue growth while increasing earnings per share by 12% to $1.57. Furthermore, the June quarter revenue records were apparent in more than 2 dozen countries and regions, including the US, Canada, Latin America, Europe, Middle East, India, and South Asia. Most importantly, iPhone sales grew 13% year over year. The iPhone is the gateway to Apple's ecosystem. If somebody buys an iPhone, they're more likely to subscribe to Apple Music. They're more likely to purchase Apple TV Plus. They're more likely to purchase the Apple plan for the all-in-one plan, which is what my family subscribes to, where you get the cloud services for data, you get Apple Music, you get Apple News, and you get Apple TV Plus. If you have an iPhone, you're more likely to purchase that. So the iPhone is an indicator of future sales for other categories for its business. And the fact that iPhone sales grew by 13% was a positive surprise in the most recently completed quarter. And of course, since then, Apple announced the next generation lineup of iPhones and introduced the iPhone Air at a higher price point. And then the more expensive models were up by $100. So the average selling price of this year's lineup is likely to be higher than last year's lineup. But most importantly, Apple kept the introduction price of the introductory model the same. I believe it's still $700 for the Apple iPhone 17, the base model of the new iPhone. So despite the tariffs, which are going to make production more difficult and more expensive for Apple, even though they've earned some exemptions, etc., and they're shifting some production to India from China, the company is still withstanding these massive geopolitical tensions and increases in trade barriers relatively well because of its size and its clout. CEO Tim Cook now, during the second administration of President Donald Trump, has done a great balancing act of keeping the relationship with President Donald Trump and getting exemptions for Apple while earning exemptions for Apple while other competitors have not received those kinds of exemptions. So CEO Tim Cook can be given credit for excellent management of the relationship between the company and the US government and the company and the Chinese government, walking that tightrope effectively well so far. By the way, this most recently completed earnings call transcript that I've highlighted to highlight the big picture items, I've made it available for channel members, and you can join my channel for less than $5 a month. See the link in the description to see all the benefits you get. So I mentioned I didn't like Apple's valuation coming into the year. I didn't like the risk versus reward. And now that the price has increased, it's trading near the 52-week high of $260. It's now trading at 256. So it's very close to the 52-week high. The intrinsic value per share, I calculated at $209. So the stock looks overvalued, and especially overvalued since the price increase in the last month. It's up over 4.3% today alone. I don't like the risks that Apple still faces. It still has those geopolitical challenges. It still manufactures nearly all of its products outside of the United States at a time when the administration is crucially against companies that are outsourcing production outside of the United States, all of which, coupled with the fact that the company looks very behind on artificial intelligence, while its competitors, large tech companies, have invested and generated a lot of expansion in their capabilities. So, all in all, if I was to update this question that investors are asking me, do I think Apple stock is a buy now? I still think no. I still think it's not the right time or the right price to invest in Apple. So I reiterated my hold rating on this company right now. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.